Hello, everyone. Today is October 28th, 2021. I'm here with Jan Farley. Jan is the lead broker for San Diego Living Real Estate. Thanks for coming on the podcast, Jan.
My pleasure, Krosh.
How long have you been a real estate agent?
Since I was 19, so a few years, 40 plus.
And has the whole time been in San Diego?
No, I was in the Bay Area in the entire 90s and later part of the 80s. And then
Okay.
I came back to San Diego.
You were originally from San Diego?
Correct. I
Okay.
am a native.
Nice. How how is the so you've been in the San Diego market for the last 20 or so years?
20, 21 years, yes.
Okay. How how has it been?
It has been, over those 21 years, it has been sort of a roller coaster. In the early 2000s, it was kind of quiet. There were a lot of listings on the market. It's very, very what we call normalized. Um, and then around 2003, we started to see this rapid increase in pricing with multiple offers and bidding wars and um, crazy things happening up until about mid 2007. After that, we had the crash of 2008, which lasted basically into 11 and 12. We started really getting recovery in 2013 from that. And then it's been up since then.
How has COVID affected real estate in San Diego?
So the when we were first locked down in March, around the 15th of March, 17th, somewhere in there, real estate just quit because we were not on the essential list of businesses. So there were approximately 2 months where really there was no real estate activity going on. They were encouraging us to sell home sight unseen. Most of us didn't want to do that. That is fraught with problems later on down the line, and there are some lawsuits going on about that now. But California Association of Realtors really went to bat for us and lobbied and got us deemed essential about mid-May. So starting at about the end of May, first part of June, there was a lot of pent-up demand from those 2 months, and the market incredibly took off.
Wow. Is it any different this last year than, say, because when you describe 2003 to 2007, where there were these bidding wars, it seems pretty similar to what's been going on over the last year or so.
There are bidding wars, but the difference is back in 2003 to 2007, there were a lot of listings. There was a lot to buy. You had choices. You could go look at a lot of different areas, neighborhoods, condos, homes. But in this market, we have the lowest listings that we've ever had, the lowest number.
Oh, wow. And by what metric do you find that out?
We have a source called InfoSparks that monitors all the metrics for the entire state. It's pretty cool because you can tailor it to your county, your city. You can do single family, multiple family, all kinds of different metrics. Um, just the county in general, we have under 2,500 listings for the entire county right now, which is the lowest level we've ever seen it at.
Wow. What do you think the reason for that is?
I think a lot of it is COVID related. Part of it is that we have underbuilt in this state for the past 20 years. The number of homes that we've needed. We have new households forming all the time, plus people moving here from other states for their jobs, et cetera. And they feel that we have basically close to 2 million homes in deficit of what we need. So that's number one, that's been going on a long time. Number two, because of COVID, some people just haven't wanted to sell. They haven't wanted to have people through their homes. So that's a factor. And another factor basically is the rent moratorium as well. There were a lot of people that wanted to sell their tenant occupied homes, and they really couldn't do it because they couldn't have the tenant leave. So it was really nebulous trying to buy a tenant occupied home if you didn't have any idea of when you were going to be able to get them to move. So it's kind of a three-pronged thing that caused this lack of listings. I thought we were starting to see more, but we really aren't seeing any more right now yet. October might be a different story. My stats only go through the end of September, so it's kind of, I have to wait until the 31st to see how October did.
Okay. Wow. When did the rent moratorium end?
It ended statewide September 30th. There are cities and municipalities that still have their own rent moratorium. San Diego County does not have one. They had their own, but it expired mid-August. So when the statewide one expired, then that opened up this avenue so that landlords could begin to move forward.
And that's the reason you expect it to pick up a bit?
I believe so, yes. We've seen a little bit more activity. And interestingly, we've been seeing a few more days on market, which is quite an indicator of where pricing is going to go. I always say that if it's on the market for 2 weeks, it's overpriced because everything sells so quickly with this lack of inventory. So our days on market went up just a tad bit. We were at about 6, and now we're at about 10.
Okay. And how long is that increase? Was that over the last 3 months? That increase from 6 to 10?
That has been happening ever since COVID.
Okay. Got it.
Yeah, it's insane. It's great for sellers with the multiple offers. There's not much inventory, so you are getting a lot of multiple offers. But I have seen in my own experience and in talking with a lot of agents that we're getting fewer offers than we were during last summer.
Okay. Wow, that's interesting. So it's a three-pronged dilemma that we're currently in with the lack of inventory. It's California in general
Correct.
has not built enough homes. What was the second one?
The second one was COVID itself. So
COVID
I'm
itself.
assuming that one's going to start easing. Although some sellers still are very cautious.
Yes, that's understandable.
Yes.
It's just something that relays through our mind, even with the vaccine. This sense of caution after the last 2 years nearly now that we've had.
Right.
And the third part was the moratorium, which is being lifted. So
yes.
The last two seem to hopefully, at least be on an upward trend in regards to a seller's ability to, or a homeowner's ability to sell their home if so desired.
Yes, especially in San Diego County. I know LA still has a pretty draconian eviction moratorium, and I believe San Francisco does as well. But San Diego, we should see an uptick of listings here.
What is Los Angeles's and San Francisco's moratorium? Is it indefinite?
I'm sorry, could you repeat that one?
Is LA's and San Francisco's moratorium indefinite?
It has an end date, but I believe it's towards the end of 2022.
Okay, wow.
Yeah.
That is a long time.
It is. I'm sure there are lawsuits from the Apartment Renters Association and probably other associations trying to rectify that. But honestly, that will really hurt mom and pop landowners who really need to sell their property and just can't.
It seems that that would wreck the, the least wealthy of homeowners, whereas the more wealthy conglomerate homeowners or individuals who have a large real estate assets, they can hold on, they can withstand that. But then, like you said, the mom and pop, it's just they have, one or two rental properties, and those are their, retirements possibly.
Right. Yeah, it seems like every time I read an article about this, the misconception is that landlords are big apartment owners and they own corporations who own huge amount of property. The California Association of Realtors estimates that 75% of rental properties are just single people who own one, maybe two properties. So until that misconception gets cleared up, I think we're still going to see some of this.
That's a huge misconception.
Yeah, yeah.
And especially in this state.
Absolutely, yeah. Then they kind of paint landlords as evil, greedy. And really, they're not. They're just trying to, a lot of people have these properties as their retirement plan. And, they're just having to make decisions based on whatever the facts are. If they can make their payments, great. If they can't, they'll have to punt.
That's how it looks. It sounds, doesn't seem very great, but that is how the outlook seems for a lot of homeowners.
Right. Now, there is still some rental assistance going on, basically in individual cities. Just had one tenant who qualified for 4 months of future rent. So hopefully there are still some assistance programs like that available.
Okay, so at least then the tenant has something where they can provide the landlord instead of just the landlord having to take the loss.
Correct. They paid it directly to the landlord, which was great.
Oh, wow.
Yeah.
Okay, that is great.
That's the city of Chula Vista, in case any of your listeners are interested.
Wow.
It was very easy to qualify for.
Okay. That's good to know. Wow. I'm glad San Diego lifted that. The moratorium on rent. I think that's going to have huge repercussions for LA and San Francisco.
Absolutely. I think, yep. I think we'll start to see, unless there is some sort of help, and we're kind of post-COVID now, I'm sure will be, it seems like there's not that much incentive for legislators to provide any help, but a lot of homeowners, renters, landlords haven't received rent in more than a year and a half. And I don't see how they think that's tenable. But I think we're getting past where they're going to do some help for that.
Hopefully. Is there assistance on mortgage as well? Or what? So say a tenant isn't paying their rent and then a homeowner still has mortgage. Do they have any, are they able to delay their mortgage payments still, or is that?
Yes. The original forbearance program didn't last very long. It was about a 6-month program back in 2020. And I think most of those ended towards November of 2020. Okay. So, there was not a lot of help given to homeowners and landlords.
That's very, very tough for a homeowner. I couldn't imagine renting out a property and then having to take on that loss it would be nearly I literally can't imagine how I could afford that.
And same here. There was some help, but I don't think a lot of people realized that they might qualify for the EIDL SBA loans as small landlords. I don't think most people realize that they could have possibly. That would have helped, but it's money you have to pay back, and that's kind of a two-edged sword. I mean, now you've got two loans, so
Yes, and that is a double-edged sword, and it's not. Yeah, that's really tough. So going back to the first prong, you said that California has an underhousing problem of nearly 2 million homes,
correct.
and you said a lot of that was instantiated over the last 20 years.
Yes.
How was that done?
That is mostly a result of what we call NIMBY, not in my backyard. Um, People are all for building, but they want to keep their communities the same way it is now. They love their little community. They like having vacant lots around them sometimes. And so a lot of times it's very difficult for anyone to build. Besides the fact that building permits and fees are staggering, it's hard for an individual to build, and it's even harder for a developer to build. They estimate that 40% of the cost of a new home is fees, permits, unrecoverable. It's not the cost of building the home. So that's one of the other reasons that they have to really take into consideration what they'll be able to sell that home for before they start building it. And it just makes it a lot less affordable here. California just passed, they've been trying to remedy this by allowing people to build what we call ADUs, or accessory dwelling units, granny flats, if you will, to make it much more easy for them to do that so that there's more rental housing available. And the state also just passed another statute where you can basically split your lot, build another unit on one lot and 2 units on the other lot you just split off. I don't think that's going to have a huge impact. Most of us don't have that much land on our lots, so I don't really think it's going to be a huge impact, but it will help a little bit. So what I do see also is you're not getting a lot of condos being built unless they're luxury, and mostly that has to do with the construction defect laws that we have in this state. It's a 10-year liability, and I've lived in about 3 HOAs, and all 3 of them have sued the developer in about year 9, for some defect that they found. And so developers are a little leery about building condos now. If they do build them, they will hold on to them for 10 years, rent them out, and then sell them. So that's another issue. A lot of our problems in California with building have to do with laws, permits, fees, things like that.
Wow, what types of permits and fees do you know? Any particular ones?
There are school fees, especially, so most of our building in San Diego County is going on down in Eastlake, Chula Vista area. And when you start a new development, there may not be a school in the area. So they pay some school fees to help start that. They have to provide parks. And then building permits in general, water meter permits, sewer, all of that is really, really expensive. The cities make a lot of money off of those permits and fees. So it makes it prohibitive.
And it makes developers weary of investing in any sort of building projects.
Right. Except for high end. I mean, they figure they can make the money on high end. There is a lot of apartment building going on, but it's not an opportunity if you would like to become a homeowner.
No, there is a lot of apartment building and luxury apartment building.
Yes,
Is and what's the reason in particular luxury is being developed?
yes. Well, rents are very high, so I think that's the
Okay,
impetus there.
got it. Just a higher profit margin.
Right.
Wow. Is there any sort of, so it's just fees and legislation really that holds developers back because it makes the price of developing way too high, which really affects everyone at the end of the day, renters too.
Yeah, it drives up the average price, definitely, or even the minimum price. I think most new developments, I don't think anything starts under 600. I mean, you might call that's entry level in San Diego, and I don't know that that's actually an entry level price for most people.
600, yes, it's not. And a lot of people who've been used to a standard price, I mean, even over the last 3 or 4 years, it's really gone up
Yeah,
pretty dramatically.
I know there has been some attrition. I was working with several clients who just kind of gave up in San Diego, and some of them transferred to places like Visalia, places in middle central California that are a lot less expensive. So there are some opportunities, but I don't know what they do for work. Or if you work in biotech, for instance, probably there's nothing there for you to do. So it's not an opportunity for everyone to do that.
No, it's not. And as long as there's, you know, the a shortage of supply, it's really going to be the people who are at the bottom of the barrel that are going to struggle. And you know, it really affects the poorest people the worst.
It absolutely does.
Do you see any remediation of this? Any elite, sort of light at the end of the tunnel coming, or does it seem like this is more or less going to be the way business is done for the next 5 to 10
I
years?
wish I did, but it seems like because of COVID and lack of revenue that was coming into the county and state level and city level, um, they're just dreaming up more ways to tax housing. San Diego just passed. We're trying to get them to reconsider, but they just passed a vehicle miles traveled tax that will seriously impact the price of new homes that are out in the outskirting areas. Fallbrook, North Escondido, Alpine, anywhere that is further away from the city center, they are tacking on this vehicle mile travel tax, and we estimate it could add 250,000 to the price of a home in those areas.
Wow,
Yeah,
that's I kind of want. Wow, that is
yeah,
terrible.
it is. And the state kind of authorized this, and they had two different ways of looking at it, but San Diego decided to take the most revenue gathering approach to any of them. And hopefully, there is a lot of opposition to this, and hopefully we'll be able to get this reconsidered. But at this point in time, it looks like we're going to be stuck with that.
What does an opposition to that look like?
Well, lawsuits. You know, there's the thought that this disproportionately will affect minorities, which can tend to live in more outskirts areas. And so I think, as a fair housing issue, we might be able to get something done there.
It seems that's an obvious contradiction to the law, or it's the most impoverished people have the longest commutes generally.
Correct. And the issue with that is too, additionally, it's not going to really be based on how many miles you actually travel. So for instance, if you live in Temecula and commute into San Diego, you're not going to be faced with this tax because it wasn't added onto your house to begin with. So it's really not fair. There's no way to make it fair. And you may not even commute if you live in Fallbrook. You might actually work in Fallbrook. So, you were disproportionately taxed. It's kind of like taxation without representation.
Absolutely. I work remotely. And what if I wanted to live in East County,
Right.
wanted to live in Alpine, and I want to do it because I can get a lot of land for cheap and I don't have to travel anywhere. But then, where does this arbitrary location of centralization come from?
They have a formula, and a lot of it is rural. East, like Hamul, that area is going to be impacted, and north, like north of Escondido, will be the most impacted areas.
Wow, I understand, because then they're saying, the west side of San Diego, especially probably from La Jolla to downtown, is the most central location, but you can live in that town north of Escondido and
Right.
work remotely, or you can just go into Escondido for your work.
Right. So really, this is going to impact future building. It's just plain and simple going to do that. If the builder doesn't feel they can sell the house for enough to make that up, then they're not going to build it.
Wow. And those are the areas where do you think those are the areas that can use the most building?
Yeah. Yes. We have a lot of vacant land between Escondido to the north and Vista to the west, to the east, that really could be developed.
Okay. And this will probably forestall that.
Correct.
Wow, that's sad.
It is. And we have low interest rates right now, so some of those prices are affordable, but when interest rates go back up to what they typically are, closer to 4 or 5%, they won't be affordable.
Do you see a time where do you see the interest rates going back up anytime soon?
The Fed signaled yesterday that it wouldn't be going up this year. They seem to be concerned about inflation, but I think they're more concerned about the jobless rate still at this point in time, especially California. We continue to struggle with more unemployment, while the rest of the country seems to be normalizing as far as their unemployment rates. So I think they're kind of weighing those two things between each other.
Is California struggling with its unemployment?
Yes, we're increasing our unemployment rates when other states are decreasing.
Wow.
It's interesting because the experts really had an opinion why that was happening, but it's kind of blown out of the water now. They are struggling with figuring out why that's happening. Honestly, I believe that businesses are still going out of business. They struggled and held on as long as they can. So I think we're eliminating jobs still in California, being that our lockdown and our measures went on a little longer than they did in other states.
And even though those lockdowns and measures have been lifted, there's still repercussions that are being felt today and will probably go on for a while now.
Yes, and we have this employment issue also. It's very interesting. I'm sure somebody will study this and we'll figure out what's really happening at some point. But we have restaurants closing because they can't hire enough staff. And yet the unemployment rate keeps going up. And I don't know if people moved to other areas where it was more affordable, and so they're not taking some of these jobs. People moved out of state who were employed in these areas, possibly. I think it's going to be a while before we sort that out to see what actually is happening. But it's kind of disturbing that we still are losing this many jobs.
That is disturbing, and especially considering the rest of the country seems to be recovering.
Correct.
How is real estate in the rest of the country compared to California?
Knock on wood, it's been really great. It's been difficult to get buyers into homes, but it's been brisk, and I think it's going to stay that way since we don't have, a lot more housing being built. People still want their part of the American dream. They still want to own a home. And if we could just get some more affordable homes built, I think that would really help our economy. They say that for every home that's sold, it creates 2,000 little tiny transactions, or some big ones. People buy new flooring, they buy a new couch, somebody buys a congratulations card. Housing drives the economy, and so we really need to make sure we have enough housing.
Yes, we do need to make sure we have enough housing, and it's not always necessarily intuitive to how what we do can have impacts to the poorest people, and what
Correct.
seems like it could be, helping the most impoverished of us is actually just a vicious cycle of it affects them the worst, and they're the ones who suffer. Usually if it's a bad policy, everyone suffers, but it
Right.
tends to be the most impoverished really feel the worst consequences.
Right, which is usually opposite of the intent.
Exactly.
I know that the eviction moratorium was meant to protect this class of people who are probably seen as lower socioeconomic, but it really didn't help a lot of people because everyone froze in place and there was nothing to rent because everyone froze in place. And no new rentals were coming on the market because of the eviction moratorium. So it really didn't help the people they hoped it would help. It helped a little bit, but it didn't have the impact that they hoped it would.
No, it didn't. And it seems that we're going to have to live with the consequences for a couple more years.
Yeah, I believe so.
Wow. So you now are a broker for San Diego Living Real Estate.
Correct.
How has that been? How has that journey been?
Well, the queen of good timing that I am, we opened just before COVID hit. So the plan was to gear up property management and hire agents who fit with our culture. A lot of that kind of just froze during COVID, but we still, with the agents that we have, we still made a profit. We expand a little bit. We're doing marketing, so it's doing really well, better than I could have imagined during COVID. So I feel really blessed about that.
That's exciting.
Yeah.
Wow, especially considering how low the inventory is and how difficult that can make.
Yes. Fortunately, I have some very experienced agents, and because of their sphere of influence and their contacts, they've still been able to to have a lot of business.
That's awesome. How do you see, moving forward San Diego living real estate?
Well, we kind of want to gear up property management and expand into some more territories with agents and probably a mortgage division at some point. But I'd also like to, sooner than later, get a commercial division up and running.
What is a mortgage division?
That's where we have our own mortgage in-house, loans.
Okay.
So we would have some loan professionals working with us.
Great. And a commercial division?
Yes. So my vision for right now is mostly leasing for that. The jury for me is still out on how commercial real estate is going to be impacted by all this now that so many people are working from home and telecommuting. I do see a lot of commercial vacancies, but we'll have to see if that lasts. I'm not quite sure.
Okay. And there's no separate licenses for commercial or home, family dwelling units, are there?
Correct. The only special licensing would be with the mortgage division. Until 2008, there was no special licensing for that. But after the crash, they kind of blamed the mortgage professionals for that. And so now there is a national license that you have to add on to the top of your real estate license for that. It's not that hard to get, but it's another layer that they feel is protection for the consumer, which it probably is.
Okay. And when you say, do you believe that because that's the traditional thinking, is that the 2008 crash was a result of negligent loan handouts? What do you believe caused the 2008 crash, or what do you think is the big lesson to take out of that?
Absolutely. I was in mortgages as well at that time, and it was irresponsible lending, absolutely irresponsible lending. You could get 100% financing, not prove your income, not prove you even have a job. And all you needed was a good credit score. On top of that, then that wasn't good enough. So they brought out these negative amortization loans. You paid a small payment and the rest of the interest would go on the back, and it would increase your balance, and it made it much more difficult to get out of that loan. They also had prepayment penalties, so that was another problem.
Oh, wow.
Might be able to get out of your home, but you had a 6-month interest that you had to pay as a penalty, and that was pretty hefty at some of the interest rates we had at the time.
Was that just for
that
negative?
caused the short sales and the foreclosures, right? All of that.
Okay. Was that a result of the negative amortization? Is that a practice anymore?
No.
Okay.
And we don't have prepayment penalties anymore.
Okay.
They made quite a few revisions. They also made it really difficult to qualify for a mortgage. We used to have something we called stated income, which was basically for self-employed. You could provide bank statements that would show an average amount of money coming into your account, and they would use that to be your income. But they were allowing everybody to do that, even people with a paycheck, and that's just not what it was for. And so that's not being done still, and it's kind of impacting self-employed people's ability to purchase. But there are now a few bank statement loans coming back in, where if you provide 24 months of bank statements, they'll average the income and use that.
Okay. That Yes, because I purchased, within the last 5 years, and one of the huge points was my previous employer over the last 2 years and my income over the last 2 years, and even
Absolutely.
you know for this last over this last year, I've gotten a quote and then or talked to a bank about possibly getting a mortgage, and
Mhm.
that's a huge point is, what's your income over this last 2 years? Who is your employer? How much were you making? They want to verify that those are all, you know, able to meet, this mortgage. You're making enough so you can meet that mortgage throughout the next however long.
Absolutely. Yeah, they practically want your firstborn child now.
Yes, yes. They do want all his information.
Absolutely. And every bank statement, every little piece of paper, they are very sure that you're going to make your payment now, unless something happens to you. But which is good. I mean, it is. I don't think we'll ever see a crash like that again unless we have massive nationwide uh, memory loss.
It could happen. It could
It could
happen.
happen 20 years down the line. It
Yes.
definitely could.
Hopefully not anytime soon.
Yes.
Wow. So, is there any way that you think people, when it approaches real estate, renting, purchasing, living in a certain area, that they, even for a renter, if they're renting in a city, say, and they're going to plan on living in this city for the next 30 years,
Hmm.
is there any sort of mentality that they can go in, even just with legislature, with thinking about how housing works with the economy, that you would recommend for them, over the next however long, that would benefit them when, their city says they want to do X, Y, and Z, and they put it to a vote, or things of that nature?
So there are some programs for first-time buyers that are helpful. There's FHA loans require 3.5% down payment, but they also have California has another program called CalHFA, and that will fund that 3.5%. And then sometimes, if you really qualify, you can also get on top of that money for your closing costs. So that's out there. It's not that hard to qualify for. You have to be lower income. And then a lot of cities, I know La Mesa has, Chula Vista has quite a few things. In certain areas all over San Diego, there are first-time homebuyer programs that are administered by the city. Those things can really help, and I don't think they're taken advantage of as much as they should be. Um, and the cities run out of money, so it depends on what time of year. It's probably best to try to do it between January and June, just to make sure the funds are there, because they're not replenished again until January. Um, Definitely a buyer should check into those things. And as real estate professionals, we should become familiar with those so that we can recommend them. Um,
Yes.
Another thing that's kind of happening, and it's not going to help you for an owner-occupied home, but there's this trend that's begun called co-ownership, and it's sort of timeshare, but not really. You Several investors will come in together and buy something, and then you have use of it for whatever portion you bought into, or mainly they rent it out. And that's a good way to start out if you don't have a lot of money, because it will appreciate, and at some point you'll be able to sell your portion, and that might give you the money you need for a down payment on something to occupy. I'm really checking into that right now because it's kind of fascinating how they're doing it.
Co-ownership of family dwelling units.
Yes, a single family unit.
Okay, and it's mostly implemented for rent as a rental
Right.
income source.
Yeah, because you would only own a portion of it. They're mostly doing it through the LLC vehicle. So
What do you mean?
you would be an investor in the LLC, and then at a certain point, if you wanted out, you would have to sell to your other owners or to someone else, unless everybody wanted to sell. But
Okay.
it's something that your listeners might want to look into. It might be an opportunity to start somewhere. I mean, as low as $10,000 possibly.
That's much more reasonable than some other numbers that people, we're hearing now.
Yeah, definitely.
You said an HSA loan would probably we could put 3.5% down on an
Correct.
HSA loan. What is an
Yes.
HSA loan?
Pardon me?
What is an HSA loan?
FHA.
FHA?
Yeah, Federal Housing Administration, and it's only for owner occupied purchases. It's also kind of lenient on your debt to income ratio. That's one of the other things that holds people back from being able to buy. The
Yes.
price of cars are high, everything's high. So if you have unsecured debt that you're paying on, or even secured debt with a car, it might look like you don't have enough money to pay for your home. The FHA program allows a much higher debt to income ratio, and so it's much easier to qualify for. Plus, they also allow lower credit scores, and those are insured by the federal government.
Okay. And what does that mean? Insured by the federal government?
That means that if you default, and the FHA will cover the difference between what the house was taken back at and what is still owed by the homeowner. So they insure basically 20% of the value of the house.
Okay.
So it gives because the banks really don't want to loan that skinny of a, if you put 3.5% down, you don't have a whole lot of skin in the game. So having the backing of the government to protect you in the case of default, that's the whole purpose of doing that, so that the banks has an incentive to go ahead and make that loan.
And they'll get 20% at the minimum.
Yes.
Okay, because it's insured from the federal government. So if the mortgagee can't
Correct.
make those payments, the government will step in.
Right. The borrower does have to pay a financing fee, a monthly fee. It's mortgage insurance, basically.
Okay.
That you can refinance out of that when you finally have equity and get rid of that, because it can be another $100, $200 a month.
Yes. But still, that $100 to $200 could be worth it if the down payment, for your home that you really want is now
Absolutely
affordable.
Absolutely. Most people take advantage of it, and then they just refinance it when they have the equity to do so.
That's definitely something we as real estate agents should be aware of.
Yeah, it's a good program.
Okay, wow. Do you have any recommendations for buyers? Is it even just what do you
Hang
think?
in there, and and usually it starts quieting a little bit this time of year. So we're moving into the holidays. The holidays are a really good time to buy a home. There are fewer people looking. They're more concentrating on Thanksgiving and Christmas. But it's historically October, November, and December are better time to buy. There's a little more selection, and you have a better chance, since there's less competition, of getting your offer accepted. So I would get out there. I'd get myself pre-approved. Interest rates are still under 3. And I get out there and get pre-approved and start looking at homes. Definitely.
My guest today has been Jan Farley. Thanks for coming on the podcast, Jan.
Thank you.